Hello student, welcome back to IBS. Now we have non-current asset. I think we have already discussed enough while explaining about the current asset. Current asset that will not be converted into cash within 1 year. So it will take more than 1 year to convert into cash. So that is why that is called non-current asset. So what are the thing will be part of the non-current? Long-term investment. By name suggests it is more than 4 to 12 months. That is why it is being considered long-term investment. Property, plant, equipment. If you buy any land, building or any equipment, that will be more than 12 months. Normally land, building are unlimited period of time, and for that you have to pass the depreciation. If it is fixed asset, if it is investment, so that is not your fixed asset. This is just a non-current asset. For that you cannot do the depreciation, but you have to follow other gap and IFRS related rule with regard to fair value evaluation kind of stuff. Intangible and long-term asset. Intangible long-term asset may be your goodwill or something. Other long-term assets such as long-term prepaid expense for more than 12 months, that will be your long-term prepaid expense, will come into your non-current asset. As I was discussing, prepaid pension cost, basically we have paid to employee in advance, but we need to pay later on, but since we have paid in advance, so that is why that will be our asset side. Non-current receivable, anything we are going to receive more than after 365 days or something, then that will be your non-current receivable. Now we will discuss some other non-current asset. For example, non-current receivable, it is mentioned here, restricted cash or security for asset for a specific period of time. When we buy some kind of security or something, or some asset like bond kind of stuff, they are normally hold for 5 years or 10 years. That is why restricted cash and securities or asset. Long-term prepayment, any payment we made for long period, we will recover after 1 year or more than 1 year. That will be your non-current asset. Deferred tax, we paid extra tax for tax authority, so that will be your deferred tax. That will reduce gradually to upcoming years. So that is why that is for longer period of time. That is why deferred tax asset it is being considered. This difference is coming because of tax calculation based on your financial statement, based on your tax authority way. So some of the expense and some of the revenue is been disregarded or accepted, or if you have booked lesser revenue or something, so they will ask you to book extra revenue. So then if you do all these things, then your asset, either deferred tax asset or liability, will incur. But financial statement will not be touched, they will not change, they will keep as it is. But for tax purpose, if we have paid what we have declared based on our financial statement, if you paid more than that, so that will be your fixed and deferred tax asset. If you paid what you have declared, you have paid less than that, then deferred tax liability will incur. I hope it is clear to you. Now we are going to discuss about long-term investment fund. I think we have already discussed anything which is more than 1 year, we held it for longer period, then it will be considered asset hold for longer than 1 year. Like investment point of view, if investment is hold longer than 1 year, then that will be considered as a long-term investment, LTI. For any subsidiary, if you are invested in any other company other than your company has invested to other company, that will be normally for longer period. So that is why that will be stand as a long-term investment in your balance sheet. That again have to be changed based on year to year. You have to review the fair value. That chapter will come maybe in upcoming session if it is in your syllabus. Non-current security, stock, bond and long-term notes not classify as current asset. For example, stock, bond and long-term notes, these are the things normally for longer period of time. So since these are not going to be depreciated and appreciated, just the fair value has to be taken care based on the rule and regulation. So that is why depreciation and amortization is being not charged, so that will not be considered under fixed asset. That is why whatever thing which is not been considered under fixed asset, that will go to your long-term investment. Make sure fixed asset always depreciated, amortization to be applied. Okay, if in case of goodwill, in case of physical asset for depreciation, and for goodwill for anything which is untouchable, for those things amortization will be applied. Other than that, any asset which is for longer period of time, that will be your long-term investment. Restricted fund we have discussed for debt and retirement and construction, or any bond for longer period of time that has been restricted, you cannot withdraw or something, so that will be your again long-term investment. Surrender value of life insurance, so these are the thing will be your current asset. So surrender value of life insurance is something we have purchased a life insurance There have, as of now, if I go and sold this, so as of now what value we will get, that is the value is being considered as a long term investment value. Normally what you have invested, you have invested for 20 year 2000k, so when you go and surrender they will pay you lesser 150 or something, since you have not completed the 10-year or total period. So normally what amount you are going to get, that amount will be considered your asset, not the full value, because when you invest such kind of life insurance you will get lesser for a restricted period. Idle fixed asset, any asset which is not been used in operation, that will be considered as a long-term investment. So that is why that will remain as a long-term investment. That also you need to check fair value math which is being applied. As of now, what is the value of your land? You might purchase land in 1 million, and but after 10 years their value may be 10 million, but you cannot show in balance sheet as in 1 million. That will not be fair, right? Not true and fair. So that is why you have to keep on checking the market value, and you have to update your asset value as per the IFRS or US GAAP, whatever you are following. So the key point is long term investment and the fund are intended to be used or holding beyond the short term. More than short term period if you are holding, that will be your long term investment. I think it is clear to you. We are done for the day. We'll see you into the next session. Stay tuned. Thank you very much.